What's going on, guys? This is Blockbird Cryptocurrency coming at you with another video. Bitcoin is currently trading at $7,170. It is sitting at an RSI of about 37, and we have thoroughly passed over that cross of death, and we are still in an overall downward trend. It's up a little bit, but if you look at it from a macro level, that is obviously a downward trajectory. All right, guys, so let's get into today's topic. And, well, first of all, I haven't talked to you guys for a while. How have you been? Happy Q2. I want to talk a little bit about what I've been up to, what I'm thinking about, and how I am keeping my cool during this bear market, and why I have not pulled the trigger yet on any cryptos, particularly Litecoin or Bitcoin or Vertcoin, all three of which I am watching very closely. So that's kind of the name of the game, keeping your cool and how to not jump preemptively into something. And the key to that, in my opinion, is to have a diverse range of targets. So, if you are a person who, say, is only focused on Litecoin, when Litecoin goes up and you just miss that boat, you're going to be really bummed out. Well, I think it's even broader than that. We have to think about all types of asset classes. And let's work our way to that, and let's talk about this fiat currency just briefly. I'm not going to go through this whole article, it's pretty dense. This is stuff that many of you already know, but it's just a friendly reminder about the direction that we're headed in and how I am able to keep my cool and stay in that Zen like mindset and keep myself from purchasing crypto too early and finding a bottom. Paper money eventually returns to its intrinsic value, zero, Voltaire. So paper currency has led to the collapse of almost every economy that has tried to institute a fiat currency to trade for goods and services. It's not looking very well for the once mighty dollar either. Throughout history, attempts at using fiat currency, even today, have failed. When the government prints fiat money that isn't backed by any value, disaster inevitably ensues. Still, the long history of failed fiat currency is being ignored by today's money printers. At the start of the first century, the Roman denarius was a coin containing approximately 94% real silver. By the end of the century, the amount of silver was reduced to 85. Devaluing the denarius meant Nero and succeeding emperors could pay off their bills more easily while becoming richer. 100 years later, the denarius contained less than 50% silver, and in 244 AD, Emperor Philip the Arab devalued the currency down to 0.05% silver content. By the time the Roman Empire collapsed, the denarius was made of 0.02% silver, and it became useless as a currency. And we saw similar things in China, of course, Germany, France, the list goes on. And here are people holding barrels of money. A wheelbarrow becomes a wallet. Kids stacking structures with all of this super devalue Weimar Republic money. Okay, so let's go on. Throughout the 20th century, many other countries flooded their economy with fiat money and collapsed as a result. The direct correlation between government interference with money and the devaluation of currency seems to escape many. Has the US learned anything about fiat money? The colonies happily jumped on the fiat currency bandwagon and began flooding the land with their own paper money. When these countries quickly became when these currencies quickly became overissued, they became, surprise, devalued, like the mark to come a few centuries later. Colonial currency made for excellent bathroom tissue. The Revolutionary War was financed with a paper currency called the Continental. It too crashed on a grand scale. This finally brought about some healthy American distrust for fiat currency. The US dollar was now backed by actual gold and saw the most splendid and richest economic growth in history. People came from all parts of the globe to be part of such a success story. As if on schedule, the Federal Reserve appeared. Currency once again fell under the edges of the government control and manipulation. In 1933, President Roosevelt made ownership of gold illegal. The ties between the US dollar and the country's gold reserves were severed gradually until President Nixon eliminated the gold standard entirely in 1971. The once almighty US dollar instantly turned into fiat currency. This was followed by a decade of disastrous inflation. And that is that. So, we're trending downwards. US dollar is inflating. It's losing its value. When you think about the value of, say, a silver quarter in your pocket, a quarter that was released during the first half of the 20th century, before all the silver was removed from our circulating supply. That quarter is now worth several dollars. It has held its value, but the fiat money around it has lost its value, just to put things in perspective. So let's look at the vulnerabilities of the dollar. And, I was looking into the Petro Yuan, which futures trading was launched recently. The funny thing about that, when you Google it, you can't really find any mainstream sources talking about the Petro Yuan. So you have Al Jazeera, RT, the Merkel, but no CNBC, no CNN, no New York Times. This is a really big deal. By the time you keep going and finally get to the second page, you have Bloomberg. But for the most part, no one, especially the major media outlets, are talking about the Petro Yuan. And the Petro Yuan provides a very unique use case for investors. It's an alternative fiat reserve currency to hold. And it's one of many steps that is being taken, which, in my opinion, will eventually break down the dollar. So let's read a little bit about the Petro Yuan. The imminent introduction of oil trading in yuan is a very bold move by the Chinese because the U.S. will not give up the basis of its hegemony, the dollar as the world's reserve currency, without a fight. Max Kaiser, host of RT's financial program Kaiser Report, has said. The Chinese plan to roll out a yuan-dominated oil contract before the end of the year is a very brave move, since countries who, quote, tried to exit the oil dollar matrix have met terrible ends. That's true. You should probably look into Gaddafi and why they took him out. So, there are a lot of vulnerabilities in the dollar. Okay, so without wasting any more time, I've mentioned this before in passing, but I want to talk to you about my interest in precious metals and how I anticipate markets to move. So I have been taking a close look at platinum. And platinum, unlike gold, is more so treated as an industrial metal. It tends to be vulnerable to economic recessions, whereas gold is a safe haven, platinum is usually battered. So if you look at this 2008 chart, this is approximately, during the midst of the financial crisis of 2008, platinum dropped from 2,167 all the way down to $806. So that's a heck of a drop. And as the economy began to improve, it was as high as $1,800. Didn't reach that all-time high during this current economic boom that we're in, or so-called boom. Um, and it has been slowly trading downwards as the economy has become weaker and weaker and weaker. Now, in investing, I think we should focus on the things that everyone is running away from. When everyone is being greedy, that's when you should be fearful. When everyone is fearful, that's when you should be greedy. Platinum right now amongst the metal asset classes is like the red-headed stepchild on the block. Palladium is even starting to nip at the heels of platinum, and that historically has traded significantly under platinum. Same with gold. For quite a while now, it has been outperforming platinum. So, in silver, as always, it's still been struggling, trying to keep its head above $15, but it's approximately been trading between $16 to $20 during this post-recession economy. But platinum in particular, I feel, is not getting a lot of attention. So, and that's what I want to talk about in accumulating fiat. So, let's go to CoinMarketCap. Let's say tomorrow the crypto market were to boom, and I woke up and Litecoin was was up 10 percentage points. It was trading, at $140 some, and it just kind of ran off like a runaway freight train. Well, I suspect that would probably be because there may be a black swan moment that is occurring with the stock market. The two are not closely correlated, but after observing stock markets and cryptocurrency markets for the last few days, it seems as though they can crash at the same time. But I think when there's a true black swan moment with the stock market, you're going to see a large infusion of cash into crypto, including these marquee cryptos like Litecoin. So that's going to happen, and that's inevitable. But before that happens, people are going to flee into cash, and that is going to increase the strength of the dollar, okay? And then they're going to go to traditional asset classes like gold, like silver, and they're going to dump platinum even harder. So platinum, which is trading at $935, will probably go back down to around $800 or even less once this dump happens. Because remember, platinum, unlike gold, is closely tied to industry. However, it is still considered a safe haven in terms of overall long-term wealth retention. So if I move into a position in platinum, of course, I won't get those crazy, 10x gains in a few months, but what I will get is wealth preservation as the market matures and as it climbs out of that hole. And historically, platinum trades above gold. Let's just look at gold here. So gold's all-time high within the last 5 years. I'll do 10. Within the last 10 years has only been 1864. And in contrast, platinum has been at, the last 10 years, like I said earlier, a little over 2100. So I think this is a position that I definitely, and I think someone who is interested in metals should probably, consider. course, this is not financial advice. This is just something that I would do. This is the approach that I am taking. And this is how I am able to be patient and to look at the markets. If it's bouncing, it bounces. If it goes up, it goes on a crazy bull run. It goes on a crazy bull run. Because I have other assets that I am targeting, including real estate. Expect the real estate bubble to also pop. I don't have any charts pulled up for real estate, but that's too is a zero hedge, like metals. Real estate has an intrinsic value. People will always need houses. Gold and silver goes back thousands of years as a currency. Platinum is a little newer, but it goes back hundreds of years at the very least. These are proven safe havens, and they are a hedge against runaway inflation. They are a hedge against black swan moments, particularly in stock markets and economies. And if you are a person who wants to hop into real estate, which I don't recommend that you do right now, because pretty much every major market, particularly metropolitan areas, is significantly overpriced. And naturally, that bubble too, it shall pop. So that's what I'm thinking about, guys. In terms of Q2, I'm accumulating fiat. The money that I do earn, I'm just putting it to the side and saving up, and I'm waiting for that bulletproof entry point for something like Litecoin, something like Bitcoin. And if I can't get that bulletproof entry point, I know for certain that I will get it with platinum, or I will get it with real estate. Those will inevitably crash once the economy goes down. Well, I know this video is a little long, so I'm going to go ahead and wrap it up. Thank you for tuning in, guys. I hope to post more frequently. It's been a pretty hectic few days so far with this Q2. I've just been focused actually on fundamental analysis, doing some technical, but mainly looking at fundamentals. And I've just been deep diving and just preparing for whatever is ahead of us. So I'm having, less time to do videos, but I'm going to try to get back to my daily schedule. And if I don't do a video every day, I will probably compensate and end up pushing out 3 videos in one day, like I did a couple of days ago. So again, I appreciate your support, and I will talk to you guys later. Peace.